Question number 3. Paul Foster-Bell.
Tēnā koe e te mana whakawā. Sir, my question is to the Minister of Finance and asks, how is the government's economic plan managing the challenges presented by low inflation and the outlook for the global economy?
Mr Speaker.
The Honourable Paula Bennett.
Mr Speaker, on behalf of the Minister of Finance, the current mix of lower dairy prices, low inflation and a weaker global economic outlook means lower expected growth and tax revenues for government, despite rising real wages for New Zealand households. The government's plan in response to this weaker outlook for revenue growth is to focus on managing expenditure. We're working to make each dollar go further rather than cutting spending or services.
Supplementary question, Paul Foster-Bell.
Supplementary to the Minister. What progress has the government made in balancing its books in the past 5 years?
Good question.
Mr Speaker,
Paula Bennett.
well, on behalf of the fantastic Minister of Finance, I'd like to say, the government has made good progress in balancing its books and getting back into surplus. In 2010-11, the government recorded a deficit of $18.4 billion, or 9% of GDP, on the back of the GFC and, of course, the Canterbury earthquakes. In the years following, the government recorded smaller deficits each year, and last week the government announced $414 million surplus for the 14-15 year. This met the target, of course, that we set in 2011. This result is due in part to the government's careful management of expenditure, which has fallen from 34% of GDP in 2011 to 30% of GDP in 2015.
Further supplementary.
Supplementary question, Paul Foster-Bell.
Further supplementary to the Minister. How will the government's prudent fiscal management help New Zealand manage future uncertainties?
Very good. The Honourable Paula Bennett.
On behalf of the Minister of Finance, like many New Zealand households, the government has weekly obligations it must meet and finances to balance. By analogy, if the government were the average New Zealand household, it would have had an income last year of $90,900, expenses of $90,500 and a $400 surplus at year end. This government household would have debt of $76,000 and it would be paying $59 per week in interest. So we are reasonably well positioned to weather future uncertainties. What's important is that we continue to work towards paying down that debt while continuing to meet our commitments to New Zealanders.
Supplementary
question, Paul Foster-Bell.
What recent reports has the Minister received on GDP per capita?
The Honourable Paula Bennett.
On behalf of the Minister of Finance, I have seen a report from one high-profile economic commentator, I think he means Grant Robertson, suggesting GDP per capita is falling. Not everybody knows there is more than one measure of GDP, or that per capita GDP is generally measured on an annual basis. Like most statistics, per capita GDP will fluctuate from one quarter to a quarter. You'll learn something. On an annual basis, GDP per capita is growing despite record high net migration. In the year to June, per capita GDP at current prices grew 2.1%. In real terms, it grew 0.4%. That commentator will also be assured by the 69,000 jobs.
The question is a marginal question. I suspect it was designed to attack the opposition. Question number 4, Phil Twyford.